We know Bitcoin responds pretty much immediately to a change in central banking policy, which I believe that we're on the cusp of. So I'm extremely bullish. Again, I use no leverage. We've been, buying dips. We think Bitcoin dominance is going to continue, which means that, ETH and all the other shit coins are going to struggle for a while. But, I think we could get back to 70% ish level on Bitcoin dominance. And then if you get a ripping Bitcoin market, then we get sort of the explosion in alt season. And I think because ETH has been the most hated layer one, probably the most hated mega cap crypto of the last cycle, it's probably poised to perform the best in the next leg up. So I'm extremely, on a risk reward basis, bullish on ETH because everybody hates it.
The cryptocurrency market moves at lightning speed, reacting to macroeconomic shifts faster than traditional assets. Bitcoin has proven itself hypersensitive to central bank policy changes, and according to industry experts, we're on the brink of a major monetary pivot. With the Federal Reserve's tightening cycle nearing its end, all eyes are on how digital assets will respond. History suggests a bullish surge is coming, but this time, the playbook might include an unlikely contender, Ethereum. Arthur Hayes, former BitMEX CEO and crypto heavyweight, doesn't mince words. Bitcoin responds immediately to a change in central banking policy, and we're on the cusp of one. His strategy? No leverage, steady accumulation, and a firm belief in Bitcoin's continued dominance, potentially climbing back to 70% of the crypto market cap. But here's the twist. While altcoins may struggle in Bitcoin's shadow, Hayes sees a hidden opportunity in Ethereum, calling it the most hated mega-cap crypto of the last cycle. And in markets, extreme pessimism often sets the stage for the biggest rebounds. If Bitcoin runs, Ethereum could be the dark horse leading the next alt-season charge. We will now bring you clips from Arthur Hayes' latest interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
This is a seminal moment in global markets history where you have China attempting to regain its top spot as the top economic power that it had pretty much for the entirety of human civilization, apart from the Industrial Revolution in Judeo-Christian America and Europe. And that system negotiating how it's going to sort of coexist together in this new reality that we have in 2024. And so what Trump is doing is not his own idea. It's an acceleration of something that was going to happen anyways. And this, blunt force terrorist weapon that he's wielding is sort of the catharsis that we've been waiting for. And, yesterday, obviously we're recording this on, I guess, Tuesday morning in Asia. Markets opened in Asia down 5%, Nikkei down 6 or 7, HSI down 10, CSI down 5. And then sort of we had this relief rally in the US overnight. I woke up and everyone was like, oh, yeah, just rattling off the different countries that have bent the knee to Trump. Oh, Japan's going to do whatever it takes. Vietnam's going to do whatever it takes. And which is, part and parcel of his plan, right? I'm going to roll out this massive tariff number on big bad America. And you guys are going to come and you're going to bend the knee. You're not going to retaliate. You're going to do what I ask you to do, whatever that is, right? But again, this isn't about Vietnam and Mexico and Canada and all these other countries. If you look at the massive dispersions between who finances the world and who builds the things, it's America and China. It's all about what is the new agreement going to be between America and China. And I don't think that Xi Jinping can bend the knee to Trump, because that would essentially mean that China is going to go back to 19th century Ming Dynasty, where they had drugs sold to them by the British. They had trade treaties enforced upon them at gunboat. And he's going to do that again. And obviously a less violent mechanism, this tariff thing, and just agree to the big bad white man who tells him he's got to change his economic policy for the 1.4 billion people that he represents. So I just don't think there's a deal that can happen. I don't think the markets recognize that yet. We're still in the denial phase. Oh, China just makes cheap shit that's really bad. That's what, Americans and lots of people in the West think, environmental degradation, child labor, ethnic cleansing, all the same tropes that you can read in every single major Western newspaper. And I just don't think that China Xi Jinping can sit there and take that abuse and say, okay, great, I'm just going to reform my whole economic system so that, the American side does better than they have done over the past 40 years. And so ultimately, I think that results in China finally running an independent monetary policy, which they really haven't done since 1949. It's always been tethered to the U.S. and a basket of other currencies, which has put them in a situation where they have a balance sheet recession, they had an overvalued property market. They purposely popped that bubble because they felt it was not great for the rejuvenation of China to essentially finance the building of a bunch of worthless apartments. They wanted to build stuff. But again, they had to deflate this asset class. It's caused a massive economic dislocation in China. The response is to print money and let your currency depreciate. They're printing the money onshore, but they're not letting the currency depreciate because, again, I think both sides want to find a deal. I honestly think that neither side will be able to find the deal that works for their domestic populations, and the result will be CNY, the Chinese yuan, at 8, 9, 10, 11, some level like that, so that it allows China to do what it needs to do, which is print money, fiscal spending, monetary easing, quantitative easing, and let the currency depreciate massively, which is obviously very good for crypto. But that's sort of the framework that I'm operating under. We're not there yet. Both Xi and Trump are putting out the "I want to do a deal" feelers. I'm sure there'll be some sort of like jamboree meeting at some point. And everyone's like, "Oh yeah, China and the U.S. are going to find a way to coexist economically in this new system. The markets are going to be rallying. Ultimately, there won't be any deal, and then everything falls apart again." And hopefully, by that point, Bitcoin ditches this correlation to the Nasdaq, and we sort of can outperform in a meaningful way on this global reflation and sort of decoupling of China and sort of the Western ecosystems. So that's kind of how I'm looking at it. I think all the sort of noise around Vietnam or whoever just going and doing a deal, great. Japan's going to do a deal. Vietnam's going to do a deal. Bangladesh is going to do a deal. Who gives a fuck, right? Unless China's coming to the table and bending the knee, then, great. The S&P, I think it's up on the day right now, but that's just a bear trap.
We're at a pivotal moment in global markets, with China trying to regain its position as an economic powerhouse. Trump's tariffs may be accelerating what was already inevitable, a confrontation between the US and China. While countries like Japan and Vietnam may fall in line, the real issue is China. Xi Jinping isn't going to back down easily, and a resolution seems unlikely. This could lead to a major shift, with cryptocurrencies like Bitcoin potentially benefiting from the fallout. The US faces a major shift after decades of outsourcing manufacturing. Now, inflation and a potential 80 to 90% devaluation of the dollar loom, especially against gold and Bitcoin. China's own struggles with property market crashes are leading to reflation and currency devaluation. Both countries may resort to printing money to avoid austerity, creating a scenario where traditional currencies weaken. According to Arthur Hayes, this is where crypto, especially Bitcoin, becomes a powerful alternative, unaffected by the political and economic turmoil both nations face. Let's watch more clips from the interview.
I mean, I guess we don't know, but at the end of the day, if you think about it from the United States perspective, they're going to do the similar thing to China, right? China was reflating a balance sheet recession due to a property market bust and sort of over build out of certain things, right? And they're going to fiscally and monetarily reflate, and the balancing factor is the currency. The United States has a different problem, shipped all of its manufacturing overseas so that stock shareholders can make a bunch of money over the last 50 years. And it's not like the US can't ever make a battery. They just didn't want to do it because it was really expensive. Well, okay, let's just, bring all that production home, inflate the currency. The dollar goes to shit. Now, maybe not against another fiat currency, but against gold and against Bitcoin, we're talking 80, 90% devaluation of the dollar. In nominal terms, it'll be fine. And so then, okay, maybe over 5 or 10 or 15 years or whatever the time period is, the United States can make a battery just as good as China can make a battery. And then it just comes down to everyone else's ideological and geopolitical decision of who they want to trade with, who they can trade with, security agreements, all that kind of stuff, which we can't really predict. But we do know that both systems have a problem, and neither system wants to deflate their system and then rebuild. It's, okay, we're going to take it where it is. We're not going to completely disenfranchise all of the capital holders or the politically connected entities. We're going to print a bunch of money. and our currency is going to deflate against the hardest currencies in the world, gold and Bitcoin. And so I think that's the message. We can quibble about like who trades with who, but it kind of doesn't really matter because both systems are going to use the same mechanism to get to a similar sort of goal, which is why obviously I love crypto, because I don't have to worry about earnings reports and does a CEO go to the right dinner parties and are they supporting the right political faction in each, you have Elon Musk cutting the US government, but then 50% of Tesla's production capacity is in a Shanghai factory. You have Trump is going against China saying, fuck you, I'll put another 50% tariff on. How does Elon feel in the palace right now? Right. So like it's
he's
all
not in the palace anymore. He got kicked out of the palace there. I don't think he liked that either.
So I don't know. It's trading stonks is hard. I fucking skip to Bitcoin. And I know the response. The response is printed money, devaluation of the dollar and the yuan against oil, gold, Bitcoin. That is the only answer, unless you want to essentially deflate your system and then rebuild it, which no politician has a stomach for because they won't be reelected or supported anymore. I am obviously extremely bullish on crypto and even the pretty short term. I haven't been able to do enough research, but I believe there was a closed door Fed meeting yesterday. Obviously, I'm sure to talk about market movements. There has been a statement out about it. Yet, before I got on this recording, I took a look at the MOVE volatility index of the bonds. It's at 135, which is pretty much where it was in September of last year when Powell decided to cut 50 basis points to help Kamala Harris attempt to win the election because of some other issues in the global monetary system. So we're on the cusp of central bank intervention. I haven't taken a look at the they'll come out in a few hours, the fix for the yuan this morning by the PBOC. But offshore yuan traded as high as 7.35, which is probably a 5-year high in terms of USD CNY. Are they going to jack rates internally in China to bring that back down to strengthen the currency, or is China saying, you, Trump, I'm just going to start this devaluation that I had to do to reflate my economy. So I think that yes, it looks a bit bleak and all these sorts of things. But again, what do we know is true? They must print money, they being anyone in charge, because they do not believe that they need to retrench and have austerity measures and cut spending to a degree to rebalance the system. Therefore, I think this is basically accelerated the start of the, as Raul Paul say, the banana zone, right? Because if we didn't have this tariff thing, we would have limped along. I don't know how long it would have taken. We would have gotten to the same place. I guess it would have taken a much longer time. But Trump, for whatever reason, has I'm going for it. And this tariff thing is forcing us to realize the faults in this system that we're going to have to be fixed with printed money anyways, but we're going to get there sooner. Now, what that means for stocks, I have no idea. I think that people, buying the S&P and NASDAQ at these levels are idiots that think it's just going to get smoked. Because you look at what happened in 2008, once you start printing money in this sort of collapse, the markets don't necessarily automatically respond. There's a little bit of a lag between what happens.
Despite global trade tensions and ongoing market volatility, Bitcoin remains on track to reach $1.8 million by 2035, according to market analyst Joe Burnett. This long-term bullish outlook persists even as concerns over tariffs and global economic shifts weigh on investor sentiment. The premise behind this optimism is Bitcoin's technological superiority and its potential to surpass the market cap of gold, which stands at around $21 trillion. Arthur Hayes shares a similar perspective, suggesting that Bitcoin could climb to $250,000 by the end of 2025 if the U.S. Federal Reserve enters a quantitative easing cycle. Both Burnett's and Hayes' predictions align with the notion that Bitcoin's volatility may be a sign of maturation as an asset class. While the market faces short-term uncertainties, Bitcoin continues to demonstrate its potential as a safe haven asset in times of economic stress. As traditional assets like gold benefit from rising uncertainty, Bitcoin's unique properties offer an alternative for long-term investors. Hayes emphasizes the importance of decentralized assets, particularly Bitcoin, in a world where traditional systems are leaning towards massive money printing and devaluation. Both analysts are bullish on Bitcoin's long-term value, with Hayes predicting significant growth driven by global monetary policies. Thus, despite the turbulence in global markets, Bitcoin's future remains bright as it positions itself as a digital store of value, amidst evolving financial landscapes. As we wrap up, with Ethereum gaining attention as a potential contender to Bitcoin, do you think it can lead the next alt season? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.